floor of the CME Group, this is Danny Riley with today's MrTopStep. It's April 29th, the last trading day of April. You know, we want to go back about 8 months ago when I came up here and I talked about the bear bull sentiment and the triple dot bottom at the 1037 level, and how we thought that the sentiment indicators had gone way too far to the bearish side, and that we thought that the S&P was going to rally from 12 up to 1250 to 1350. Well, lo and behold, 1358 today, this morning. And you know what? What we think this has got a lot to do with, it's got something to do with not fighting the Fed. If you want to be a trader in these markets, you got to go with the Fed. You can't fight the Fed. And this week what we learned was that while the POMO may be coming to an end in June, there may be a third POMO. And that this type of price action that we've seen where the markets will sell off, either be 50 handles or 100 handles, back and fill, and then rally again. And now, you know, typically this has been the price action that we've seen over the last few days, or even better yet, over the last 6 days, because 5 out of the last 6 days in the S&P have been higher for a total gain of 65 handles. Again, there is no fighting the Fed down here. Now, the big thing that we're going to be talking about now is the markets are on these highs, and what we're kind of thinking is that the mutual funds have played a big part in this over the last couple of days. We've seen these little buy programs that occur into the S&P, and they come in on every half hour. And what that tells us is that it's very mechanical type buying that's going on in here. And it's almost impossible to fight. Now, the other part of the thing that we're going to talk about today is the pit bulls rule on the last trading day of a quarter or the last day of a month. How these mutual funds tend to run out of money and let the market sell off a little bit here. Now, this is a probability that we think is probably going to happen here today. The markets are on a high. We're going into a weekend. And then we've got next Monday is the European holiday, May Day. So you know what? We're really still thinking the markets are good, and we really still think the markets are going higher. And our next upside objective is the 1363 level, and then up into the old highs up at the 1384 level. You know, these are prices that we haven't seen since 2007, pre-credit, credit crisis sell-off. So that said, you know what? We're not here to fight City Hall, and as long as the markets are going up, we want to go along with it. And also, you know, what we're also seeing throughout the rest of the floor is kind of a lower type volume trade here over the last couple of days since the Fed came, popping its head out. You know, I guess the real bottom line here is that the markets continue to go higher. There's still money going into stocks. And as long as that trade with the POMO is going to be backing that, it's going to be impossible to fight. We'll be back with another MrTopStep update.